Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories at 1:30 p.m. Midcaps outshine large caps on weekly options expiry day as Nifty and Sensex edge higher after a strong start.
Record Class 8 truck orders in the US in September propel Bharat Forge and GNA Axles higher. The companies get 20 to 35% of their revenue from the North American truck market.
Zee gets a fillip after Competition Commission clears its modified merger proposal with Sony. Experts see the deal offering significant synergies and stock value.
The enhancement of unsecured credit support under the Emergency Credit Line Guarantee Scheme fires a financially stressed SpiceJet. CMD Ajay Singh calls the move to ease rules a tremendous boost for airlines.
Well, the dip has been brought into in the last 1 hour. We've seen the markets perk up some more. Currently, as we speak, it's 130 points higher in the Nifty. There you can see around 11:15. There was this little bit of a nick that we saw in the market, but we're virtually back again at the high point of the day. This has turned out to be another good session for our markets. The mid-caps are outperforming. The mid-cap index is up 1.3%. And you can see strength in names like an ICICI Bank. So that surge to the high point of the day, driving the bank's outperformance. Grasim has seen a leg up in the last 1 hour or so. Hindalco and a couple of the other metal names continue to be at the high point of the day. But let's talk about mid-caps and the mid-caps that are moving around. Vivek joins us to give us that list. Vivek?
Well, that's right. The buoyancy as far as the broader markets are continuing. And today, a lot of, stocks as far as the broader end of the markets are hit fresh 52-week highs. So we are starting off with two stocks. The first one, of course, is Page Industries. Now, this particular stock today at a fresh 52-week high. The stock is up almost 8% in the last couple of trading sessions. Clearly a very, very sharp mover. The other one, of course, is Midani. This one today is moving up very sharply on strong volumes as well. And, again, one particular stock that's broken out of a range, past couple of trading sessions is up to 2.5%. And today, clearly seeing a very sharp spike up. Also, JSW Energy on the back of our strong order win, a significant order win as far as the hydropower segment is concerned, today has seen almost 11% up move. Specialty restaurants too today moving up on strong volumes. Two stocks again, HEG as well as Graphite India, electrode makers, both of them today have seen very strong up moves. And if you're talking about the volumes, almost 5 to 7 times the typical 5-day average is what we are seeing as far as both of these stocks are concerned. On the other hand, you're also seeing, network providers. You're seeing RailTel as well as Tejas Networks. Both of these stocks also doing quite well in the session after a lot of news flow that came in as far as infrastructure for the telecom space was concerned. On the other hand, when you're talking about the pharma space today, after the run-up that we saw last couple of weeks, today we're seeing a little bit of profit booking happening. Biocon's, Granules and Gland Pharma, all three of the stocks are sulking in the session today.
Okay, Vivek, those are some of the losers as far as the pharma space is concerned. Thanks, by the way, for that list. But I also wanted to talk about some of the movers in the pharma space in the broader markets. Look at something like a Newland Labs. It's up 8%. For the larger part of this year, it has been an underperformer. We have Dishman, which is up 7.5%. That is a stock which we don't talk about so often. But today, it's seeing some buying. And we also have Aarti Drugs, which is higher by 5.5%. So a lot of moves in mid-cap pharma or the small-cap pharma as well. We also have Sequence Scientific, which is surged. It's up around 4.5%. So across the board, we are seeing some buying. Yes, barring some sectors which are seeing some profit booking today. So we have something like an FMCG space because of that weak update coming in from Godrej Consumer Products. We have pharma overall, which is not doing so well today. And these were the two sectors which were doing well in last couple of weeks. So some profit booking is what we are seeing today. But it's a good time to get a technical check on the markets. Let's welcome Jay Thakkar of Marwari Shares and Finance. Jay, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting now? Is it a rally which will fizzle out soon, or we will see some legs to this?
Hi, very good afternoon to you. Well, as far as the index is concerned, we had a positive view both on the Nifty and Bank. Our target of 17,400 to 500 broadly has been achieved. As far as Bank Nifty is concerned, it was 39,500 to 39,700 range, and that has got achieved too. Now, I would say that this rally would further continue on the upside post the gap filling, provided that it doesn't break the levels of 17,200 now on the downside as far as Nifty is concerned, and 39,000 levels as far as Bank Nifty is concerned. If those levels are held, then we can see this rally or at least a bounce continuing on the upside. As far as Bank Nifty is concerned, the 40,000 would be the next level to watch out for, and on Nifty it would be 17,750. That would be the level to watch out for if these levels are held. Hence, I would say that those who are already long can continue to remain so with these as their trailing stop losses. Till these levels are held, the trend would continue to remain up. As far as stocks are concerned, I would say that yes, pharma did perform quite well in the last trading week, and we saw a breakout above the levels of 13,000 on pharma index. IT as well has performed quite well. Hence, I have one buy recommendation, initial buy recommendation on the IT pack, and I have first buy recommendation on TCS. I believe that as far as TCS is concerned, we can see some good upward momentum right now in the short term. Overall, the IT index also seems to have completed a good 5-year declining structure, and I believe that from here on we can see some good bounce back. I already had a buy recommendation on Mindtree in the last trading session, but now this for today I have a buy recommendation on TCS. So one can buy TCS, targeting almost 3,600 on the upside. One can buy this, with a stop loss. 3,300 on the upside, placing a stop loss below the levels of 3,000. So here you see there is a good risk reward for almost 1:2, 200 points on the upside and 100 points on the downside. The second buy recommendation of mine would be on Axis Bank. One can buy Axis Bank targeting 775 to 790 and place a stop loss at 746. This bank too seems to be bouncing back quite well, and I'm expecting it to retrace at least 60 to 70% of its entire fall.
Okay, Jay, thank you very much for that. Let's turn our away from the micros to the macros. Bond yields in India are surging after JP Morgan says it retains India on its watch list for bond inclusion. Lata is here with us in the studio, and she's going to tell us a little bit more. Lata, this is the much anticipated event.
Absolutely. The expectation or the hope over the last 2 months, or at least 1 month, was that come October, India would get included into the JPM bond index. We were getting early feelers that that is not going to be, but on Tuesday night it became official. JP Morgan made an announcement that India continues to remain in the watch list, and there were some problems in terms of the delay because tax have to be deducted, the delay in the settlement, and that's giving problems for the global funds to calculate, especially quarter end NAVs, etc. So the long and the short of it is that because of the recalcitrance of the funds, it is not getting included just yet, and that's one reason why the yields have gone up. The chatter in the market is that Reserve Bank has not been generous with OMOs at all. When they are in a rate hiking scenario, how will they provide liquidity has been their logic. So if RBI is not going to buy bonds and JPM guys are not going to buy bonds, rather the index followers, then the borrowing program can be a bit tough, a bit of over saturation for the market, and that's worrying the dealers. And added to all this, of course, is the crude price rise, which also indicates that inflation may have its challenges. US yields have gone up thanks to hawkish statements. So there's hardly any reason why Indian bond yields won't fall. Now the fear is that already the yields are at September highs, which is about 7.48 on the new 10-year. It can go even to 7.62, which was the June high. That's what the market is prepared for. Let me just add a word on the rupee. It is the only Asian currency which is not stronger today. Because the dollar index is off its highs, 112, it's way off 112 levels, even touched 110 and change. That's made all Asian currencies stronger today except the rupee, and that's because of crude. We have the highest vulnerability to crude among Asian economies, and dealers even said they noted oil companies buying dollars.
Okay, all right. So that's what's happening as far as the bond yields and the market is concerned. Lata, thank you so much for making sense of that move for us. So with that, we'll slip into a short break now. Up next, we'll be joined by Nitin Khara of Confidence Petroleum to discuss the company's business outlook. Stay tuned. Hi, welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, last month, the company received not for preferential allotment to issue 2 crore warrants convertible into shares at 1 rupee each to promoters. To discuss this, the outlook on the business going forward, and considering that gas prices are higher, CNG prices are higher, how will this impact the business? Nitin Khara, the Chairman and Chief Managing Director of the company, is joining us now. Mr. Khara, good afternoon. Thanks a lot for joining us. Well, that's the first question, because we've been talking about how CNG prices have gone higher. The discount between petrol and diesel to CNG is at a multi-year low. Has it impacted the conversion rate to CNG, and in turn, has it impacted demand for you?
Yeah, very good afternoon, Sonal. Very good afternoon, Rima. No, we don't find any type of any discussion in the volumes or till everyone is preparing CNG. Definitely, some price fluctuation is there. Definitely, some distance difference between the diesel and the CNG has gone down, but still it's a green fuel. People are preferring this, and day by day our volume is going on in our Bangalore, where we are installing 100 CNG stations. So there is no impact about the any impact about the prices in our Bangalore city. It's going on day by day. It's increasing.
How much higher is the volume today, say 6 months ago?
We have growth of around 40%. When we have started our first station, to till date, we have growth around 40% growth in our all stations, which we have installed till date.
Okay, so can you just give us the absolute number as well, Mr. Khara? So I was looking at your presentation. In 2022, it is 7,500 tons per month, and you expect it to go up to 25,000 tons per month. What is it currently? What is the monthly volume or, conversion rate that you're looking at? And what is the dispensation volumes for you, say, in Q2, the monthly run rate, if you can give us?
Rima, it's a, there are two, see, we are in LPG as well in CNG also.
Right.
Currently, I think you asked me about the CNG first, but what numbers we have given, that's say LPG numbers.
Okay.
That's our LPG's numbers, pack cylinder division numbers. So that's, we have already achieved 7,500. Now we are achieving around 9,000 metric ton per month in current scenario. That's our LPG business, LPG pack cylinder business. But as far as LPG, auto LPG dispensing stations are concerned, which 209 auto LPG stations are running presently, we are getting the volume equivalent to around 3 lakhs liter per day, around 2,90,000 to 3 lakhs liter per day. So there is also no impact of the. And as far as CNG, which in Bangalore, which we are developing, 100 station, there we have got the growth of around 40%. What I mean to say here.
Okay, so CNG growth is about 40%, while the LPG growth has gone up from 7,500 as of March end to about 9,000 tons per month, right?
You're right, Sona.
Okay. So can you also have plans to increase your bottling plant capacity? What is the kind of capex that you would require?
In bottling, we are intending to put around 100 to 102 crore rupees. Means presently we have 58 bottling plant, which we are going to develop 75, which we are going to take it to 75 bottling plant. So per bottling plant around 6 crore rupees we are going to invest. So around 102 crore rupees investment will be there in this coming 2-3 years.
Okay.
All right. Total, we are going to capex in the, if suppose you can ask me about the total capex about the company, we are going to put around 700 crore rupees in these 3 years, coming 3 years. By March 2025, we intend to put in CNG business as well as in LPG business, auto LPG, and pack cylinder division business. That is, we have already started B2C marketing, means direct to companies going directly supplying to customers, B2C marketing, and there also we are going to invest some around 75 crore.
So in total, 700 crores over next 2 to 3 years is the capex that you're planning. How do you plan
in 3 years.
How do you plan to fund it? What is the current balance sheet looking like for you? Will you raise funds? Will it be via internal accruals?
Yeah, internal accruals are good. EBITDA is also coming very good. And plus, as we have just raised, we are going to raise 1-2 crore warrants through warrants, and that all inclusive. And plus, as today we don't have such any debt on the companies, any term loan on the companies. So that also we can think to take some loans from the banks also, put some debt from the bank also.
How much would that be?
Internal accruals are good. So I don't think a company has to think about to take any debt or anything. But if required, we may take it.
Okay. Can you tell us a little bit more about the 700 crore of capex? 102 crore you said is an account of the increase in the number of bottling plants to 100. What about the balance? Can you give us a breakup? And the timeline by which, yeah, go ahead.
Yeah, see, as we have signed one agreement with GAIL to develop 100 CNG station in Bangalore, there we required 250 crore rupees, around approximately. And in auto LPG, where presently we have 209 station, which we are going to develop another 125 station. There we required another 125 crore. And as I told, the B2C marketing company is going to already started in some cities, Pune, Nagpur, Ahmedabad. So there we required around 75 crore to invest for the cylinders as well as for the working capital also. And another CGD players also approaching us to develop stations in their areas. So there we are thinking 100 station we may going to sign in coming soon period. There also we require 150 crore rupees. So overall around 700 crore rupees total capex company is going to do in this 3 years.
So 3 years you have capex plans in place. Can you tell us what are the revenue and margin targets for you by, say, for FY23, and over the next 3 years when these new capacities and new plants will come in place, sitting on a base of 1500 crore rupees for FY22, how much can you take it up to, say, next 3 years and this year as well?
Yeah, I'm focusing that Rima, we may get the growth of around 40 to 50% in the coming 3 years, in year by year.
Margins? What is the margin guidance that you can give us?
See, all the business are different. No, there is in auto LPG segment we are getting the 15 to 18% margin, EBITDA margin. In this CNG also we are getting 18, and B2C market margins are very good. Definitely, it's a very good margin, 20-22%. Plus, in other business like our this bottling capacity in there, where we are putting 100 crore. So there is 8 to 10% margin we are expecting. So altogether, we are expecting growth of the companies around 40 to 50% in every year.
All right, Mr. Khara, big plans in place. So good luck for that, and thanks a lot for joining us and telling us what plans are there for next 3 to 4 years and the kind of growth that you're expecting as well. With that, we'll slip into a short break now. But before we do that, here's some great news for investors. You can now track US market actions real time on Money Control. Log on to Money Control website or app and stay informed about all that matters in global markets. Welcome back. Well, let's talk about our favorite segment, Midcap Spotlight. And today, Rima is focusing on happiest minds. What's happening here?
Well, the board met over the weekend and they've approved a fundraise of 1,400 crore rupees, and this is over and above the 670 crore of cash that the company had as of Q1, which means totally the company would be sitting on more than 2,000 crore of fundraise. We tried to get in touch with the management, but they are in a silent period ahead of their Q2 earnings. So, but just to, perhaps throw some light on what they could be using so much money for. One is potential M&A. The company has very aggressive growth plans. They've outlined that we will be seeing a 25% CAGR over the next 5 years. Their aspiration is that the revenues will hit $1 billion by FY31. This compares with revenues of only $146 million as of FY22. So the company needs to grow, show an incremental revenue of $850 million over the next 8-9 years, and the company has indicated that it's not just going to be organic. The M&A is going to play a significant role in the company achieving this 10-year growth forecast of $1 billion. So M&A could be one of the reasons why the company is accumulating this war chest. Secondly, they're also increasing their facilities, the overall workspace that they have. So very recently, the company purchased a commercial property in Bengaluru for a consideration of about 101 crore to increase their seating capacity, to augment their delivery and in-house training capabilities. So capex and increasing their workspace as the company gears up for making the next leap in terms of revenue growth could be another area. And finally, perhaps they thought that the stock price decline also makes it fairly attractive, because the stock is down 25% in the last 1 year, or 30% from its 52-week high. So maybe the stock price decline also tempted, the board to consider a fundraise.
Okay, so fundraising plans in place. The stock is up 1.5%, and markets too are doing very well, with the mid caps outperforming the frontliners. And with that, we'll take your leave on this edition of Midcap Radar. Stay tuned, Mutual Fund Corner, when we return.